Okay, you are being recorded. Okay, we're live. Okay, guys, let's just start with a little bit of like at the beginning intro and stuff like that. I'm Victor. Everybody knows me around here. You guys are all my friends, hopefully. And one of the reasons why I wanted to do this for such a long time is because, first of all, I'm in a lot of different group chats to talk about economy. The economy has always been an interest of mine, of course, making money, right? But the most important thing is that there's a lot of misinformation on the internet and on the news, and a lot of times the news media is MSNBC, Fox News Network, or whatever. It doesn't matter. What they do is they try to get you to continue to keep your money into the system. When I say system, it's the stock market, the general economy, and there's a lot of people taking your money, right? I'm talking about the governments and stuff like that. But so I wanted to make sure that everybody understands some of the lies and the misconceptions or whatnot between the government. And when I say the government, I'm not talking about the Canadian. Canadian is also part of it, but the predominantly the U.S. Why the U.S. economy is 300 million. We're about 30 million in terms of population, so we're about 10% of the size. So whatever, if they sneeze, we're gonna feel it, right? Um, you're gonna see a precipitous of different major events that's coming, starting with it's just like the COVID, right? So I'm gonna talk about that in a bit, and I'm gonna introduce the rest of these slides, but just want to get started here. Um, today's session is an experiment for me. I wanted to try out a different way in which I'm just gonna throw everything into this crowd, right? You guys gonna give me I'm hoping that you guys can give me a little bit later in the survey format. What do you guys want to hear more? When I say, so I broke it down to different sections. Macro, what is macro? Macro is macroeconomic news, right? Everything that you want to know about the economy, inflation, deflation, unemployment, what are these general concepts, right? Real estate and all that stuff. But then I'm going to give a little bit of news as well. News as in what happened last week in the last like a month, right? Um, that's in the Canadian market or in the US market. And then I'm going to talk about gold because a lot of people in this audience is interested in the things that I've been trying to tell people to get into. Get a little bit of a perception of what gold is going to do and performance and stuff like that. And I'm going to end with some Q&A, which is free for all. Just ask your questions, and it can be anything. Like I'll try to answer if I know what I'm talking about. So if it's like macro, economy, I can talk about that. If it's gold, no problem. If it's stocks, if it's um, the mechanisms for stock trading, I can definitely talk about that. Options, stocks, whatever you guys want to get into. Technical charting, I'm good at that too. So I can talk about all that, but it really just depends on what you guys want to do. And then from that, I'm just going to maybe do this on a bi-weekly, weekly basis. So let's just get started. So today on the macro event style, we're going to talk about the everything bubble. So for those of you guys that don't know, there's a big recession already here. We're already in one. Nobody tell you that because where the numbers don't reflect it. But no, most of the time, the numbers I'll tell you, we're in a state of a recession, which is 2 technical quarters of GDP negative growth. Don't forget them. They're lagging indicators. We're already in one right now, right? What I'm scared of more is the depression that's going to come right after, because this is the mother of all bubbles. I'll talk about that in a sec. Talk about the money supply. When I say money supply, I'm talking about the endless amount of money printing that the U.S. and the Canadian government is doing, and also the debt that they're creating in order to, assets and liabilities. You have to have both of them, right? So when you increase assets, you print money, right? So that's really it. I'm going to talk about some of the news that's been happening in the last couple of weeks, such as unemployment in both the U.S. and Canada. And of course, everybody's favorite topic, real estate, GTA. We're the most indebted nation when it comes to real estate, and real estate is our number one economy right now. It used to be like oil, but no longer, right? I mean, we'll talk about oil after. But yeah, I'll talk about that. I'll talk about very briefly oil because obviously that's been something happened in the last 2 weeks, and a historic event has never happened before. We'll talk about that. And then we're going to talk about these crazy bailouts that they're doing to all these U.S. companies. And then we're going to switch over gears a little bit here in terms of gold. Take a look at the performance, take a look at the outlook, and I'm just going to open it up in a QA session. So let's just get started. So for those of you guys that don't know what's happening, this is the everything bubble. The 2008 one is just a Mickey Mouse version of what's to come right after this COVID-19. Now, everybody in the media will tell you about, okay, yeah, the COVID-19 caused this and whatnot. That's not the case. The COVID-19 is the pin that's popping this major bubble. And when I say bubble, it's the debt bubble. Debt bubble is all about the credit that's inserviceable within our economy that affects things like consumer debt, government debt, corporate debt, and everything in between. We can't service it. And the last 8, 10 years, all we've been doing is just putting debt and rolling it forward and getting cheap debt. I'll talk about that in a second. But it really goes into my second point, which is this incoming recession slash depression. Why is there a depression I'm thinking versus then a garden variety recession like 2008? The depression is more about the supply shock and the demand shock. Demand shock as in we're not taking flights, we're not going out, we're not eating, we're not buying clothes, we're not doing all this stuff. So this is the demand shock, and also the supply shock that's coming. You see, for example, this today we had like food or meat from the U.S. getting cut off and stuff like that. So I'll talk about the supply chain a little bit here in regards to that and why that's going to go into a depression as opposed to a typical recession. And debt and insolvency, that's exactly what this is about. It's about our inability to service debt and keep rolling it forward from every single level. And that's consumer, government, and corporate. That's what we're going to talk about. So how did this begin? So to answer the simple understanding is we've never recovered from the 2008 crisis. So let's talk about very quickly here 50,000 foot level. What's deflation and inflation, right? So when times are good in a deflationary environment, it's beneficial to us because with the high interest rates, it protects the savers. What that means is, for example, your dad, my dad, their dad, whatever, can come home. Their houses are $50,000. They can come home with $14 an hour jobs. They can support a family of four with a house, with a driveway, with a backyard. That is no longer the case here. We're gone, totally gone a long time ago. And when I say protect savers, it means, for example, when your dollar is extremely high, you can also go to countries like second, tier countries, third tier, and your dollar can go so far. You can buy a lot more. An example of that would be, for example, and then the deflationary environment. Think of your computer. Think of your cell phone, like a flat screen TV, right? When it first came out, how much did it cost? It was like $5,000, right? And when people are saying, "Man, it's $5,000, it's too expensive," what's the cure for high prices? It's high prices. What does that mean? It means that when a company sees that a TV is $5,000 and their margins are super high, I'm gonna be like, "Yo, I'm gonna start a business with make TVs," and then Daryl's going to start a business to make TVs. And then when you have a lot of producers making exactly the same thing, the product gets better, it gets more innovative, it gets cheaper because there's more supply. And then when you get more supply, the demand goes up as well because people would want that thing, which is the best product at the lowest possible prices. That's deflationary. Okay. However, in the last 10 years, we had ultra low interest rates. What happens to ultra low interest rates for a really long time? It means that you're screwing the people that are savers and helping the people that are that benefit the debtors and create inflation. What I talk about is think about like this. Back in the day, think about it right now. Your dad, my dad, whatever. They have like let's just say $1 million RSPs, right? And they want to buy a cottage. The cottage now used to be 50,000, 300K, right? So he wants to buy a 300K cottage, but I just want to go to my bank because it's such a low interest rate. I'm going to take a 300K right now and buy the same cottage. But on the supply side, the guy that's selling it would be like, well, there's more people coming in to buy my cottage at 300. Why don't I just jack it up to 600K? He can. Why? Because there's more people that are able to take out money at such an ultra low rate, which screws everybody that's actually a saver. That's what inflation really means. It's an increase of the money supply to chase after the same finite goods and services. Okay. I don't care if it's your cell phone, TV, or whatever. It's the same thing. There's only a finite amount, right? And that's what it means. Obama and Trump, of course, when they first did get in there, and you can tell like from this slide right here, back in my parents' day when they were doing a mortgage, they were like looking at 10% mortgage rate. What that means is that it disallowed a lot of people from going and renting homes. Only the people that can afford it can get it. So there and what happens was we had an inflationary, and then when we were all born and stuff like that, it was moving to 2000, and then the crash happened back in 2008, right? So when that happened, the rates, actually, I'm going to talk about that in a sec. So right here. So back in 2008, The feds and whatnot, they came all in. They wanted to bail out everybody, and they were promising the economy that, okay, guys, we got this all covered. We're gonna print a bunch of money. We're gonna service, the debt by printing more debt. And again, what that means is that they're gonna give money to pretty much everybody, right? Like the businesses, you and me, helicopter money, all this crazy stuff. But in order to, the whole point of this is to give stimulus to the economy for a temporary time frame, right? So the whole point of low central banks, as you can guess it, right? It's to inspire you to buy more stuff, right? So that you can, get the economy going. But the problem is they never stopped it. They never raised rates back to curb the balance sheet, right? Balance sheet is basically just the government's balance sheet to pay off their debt, right? You want to raise interest rates so that you can pay off your debt. But what happened was they kept it for such a long time. And remember, this is 2008, right? Every time you go through like a deceleration in the market and whatnot, you're supposed to raise it. They never raised it until Obama came into power in 2018 or 17, or I don't remember what it was. And then Trump came, and the first thing that he he promised was tax cuts. And so he further kicked the can down the road. And remember, guys, recessions are normal. Recessions are actually good things because they weed out the bad companies, get them bankrupt, and then they switch the management teams with a clean slate, and then they can get to work, right? To be a better organizational structure as before. You're not supposed to have non-profitable companies. That's the whole point of being in business. You're supposed to make money, right? But because they held it on for so long, these companies allowed them to stay in for so long, and it creates malinvestment. I'll talk about that in a bit. But long story short is that these crazy policies had it for so long, so we had a lot of debt in the market for so long. And then when they tried to increase rates, they found out that they couldn't do it. The market started to tank, and then COVID-19, and that's where we are right now. So that's really it. So if you in one sentence, it's really debt that's really killing us, and low interest rates. Moving on. Yeah, one of my favorite movies. We can't buy we buy things we don't need with money we don't have to impress people we don't like. One of my favorite movies of all time, Fight Club. If you guys haven't seen it, go see it. But the first one is the total consumer debt, right? So mortgage, HELOC, revolving debt around your house, auto loans, credit cards, student loans. I'm talking about things that, it's increasing in inflation. I'm talking about your mortgage, or why is it getting bigger and bigger and bigger? It's because they're pumping more money, chasing the same amount of houses, right? So that's they're getting people like, man, I still need to live somewhere. So they have to chase after the same 5 houses that you, Daryl, Raymond, my dad, or whatever, right? And that's one of the reasons why we're having such a problem with servicing debt. HELOC HELOC is you're tapping your house to buy 5 other houses. Canada is very notorious for that. We'll get into that in a bit, right? Auto loans, yeah, bad. People are continuing to buy cars that they can't afford with money they don't have. Credit card, student loan, et cetera, et cetera. Student loan is actually really hurtful because this is your kids and their kids trying to get an education. Remember the saying goes, it used to be, yeah, if you don't go finish school, you're gonna end up at McDonald's working for $15 an hour. Now the saying is, you don't go to school. You go to school. You end up with 60K of debt. You come up and still work in McDonald's, and you're still paying off that 60K of debt until you die. So that's how bad it is, right? Student debt. If you take a look at the schools that are coming out right now, they have much more debt than we did back in the day when we went to university. So it's hell for them, and they come up with a much weaker position than we did. And even with school and stuff like that, the average wage has not increased at all, even in the States. You can tell it's normalized around like 4 or 5%. It's basically, when you do your annual work, they only give you like 2-3%, right? And that's just inflation. We haven't really gone like more and more and more. Typically, in a normal deflationary healthy scenario, your income grows linear, like kind of like with a couple percentage every year, and then your debt will go up with it. You can handle more debt only if you get paid more. I mean, that's just simple economics, right? But All in all, we haven't increased that much in the last like 10, 15 years. And this is the US. Canada is no different. Canada is around like 4 or 3. Now we move into the Canadian or the government debt. So first thing I want to make everybody understand is the government does not make any money. They only make money by 2 ways. They tax you to hell and they regulate the hell out of you. Okay, just remember that. In order to take so in any time the government is telling you we're going to help you, we're going to bail you out, somebody's going to have to pay for it. And guess who's going to pay for it? It's you. It's going to be your kids and the kids that are not even born yet today. These are the people that have to pay for it. This is what I mean by the government does not earn 1 penny. They are just transferring money from one body of people to another. The government's no different. In terms of the U.S. GDP growth, we're at flat 2% every year. Like, and when Trump comes in, he's like, yeah, 6%. Yeah, good luck, right? 2% for the last X amount of years. And, you know, he keeps talking about they have the best economy ever. But if that's the case, why is it that their balance sheet and their debt continue? And balance sheet and debt, it goes hand in hand, okay? Their balance sheet continues to grow. And when it grows, they print more money, right? So the question is, why would they say that they have the best economy ever and still continue to pay, like, to print out more money to service debt? Why? Why do you have to increase more, you know, debt? When times are good, you're supposed to pay off debt, right? I think that's like what your dad, my dad taught me, right? Just simple stuff. But no, that's why I'm saying one of the biggest lies in the system that they're not telling you is it's the best economy. It's not the best economy. It's never been good. But yeah, this is just another chart to talk about, you know, their debt continue to inflate. And of course, when you increase debt on the balance sheet, again, assets and liabilities, right? They always have to cancel out. So as debt goes up, money goes up. So that's why they get the money, right? Their money supply in the USA have continued to increase in the billions of dollars. And take a look at this. In 2020, this is when COVID hit. That's when it just shot up off the roof. Like looking at like 17, 18 trillions of dollars just printed nonstop. And every day more is going to come. Okay. Just want to tell you that, yeah, times are not good. Don't know why anybody says that. Canada's no different, guys. Even though Trudeau doesn't talk about it, they continue to do government programs. And by the way, how do you think they build bridges? How do you think they do like paving the roads? How do you think they're doing, you know, healthcare and stuff like that? Yeah, it's tax dollars. And if they don't have enough, they print more and issue more debt, right? Same thing with Canada. It's just our money supply continues to grow into the billions. And when that happens, there's more and more and more and more debt. Okay, and I'm going to switch a little bit more into the Canadian side now. Our Canada, great country of ours. We are the most in debt per person. Okay, this is not like the government part, but more of the person. So I'm talking about in the advanced economies, G50, G whatever. We're the most indebted nation on earth in terms of compared to U.S. per person, and that is in terms of our housing. We are the most in debt to our housing. So when I say that, 140, let's talk about 100. This is like a little bit older, but 174. What that means is for every dollar that we earn, $1.74 goes towards our house. That's how bad it is. But that's our economy. Like there's nothing else. Like we used to be oil, and then there's a couple mining, there's construction, manufacturing, but it's not as crazy as our housing, you know, debt here in Canada. You can see that, you know, a little bit of all around, but you know, maybe we're doing a little bit better. I don't know what Newfoundland's doing, but you know, we're not that much better. Okay, and that's consumer debt. We're in just mortgages and housing. Going to talk about that because I got news for you coming up. But this is just I'm just talking about the bubble, and I'm going to finally talk about corporate debt, which is also another bad problem here. We have corporate debt and with zombie companies. Two net new concepts. My favorite, my fat cat. All right, it's corporate debt. These fat CEOs and zombie companies, which is companies that don't make money or continue to survive. And I'll tell you why that's a malinvestment and that's a moral hazard. Let's talk about that first. This is just a quick chart on corporate debt in terms of the credit rating. So, you know, typically AAA rated are things like, you know, Johnson & Johnson. Those are the multi-billion blue chip safe stocks. And then there's like the junk bonds and stuff like that, right? But regardless of what you're looking at, corporate debt just continues to grow year after year after year, nonstop. Okay, and what do you think they're spending it on, right? You would think that they'll spend it on themselves, right? More to that to come. Now, in terms of the corporate and the stock market, one of the craziest things I want to point out are these freaking like overvalued stocks, and everybody is always telling you, whispering in your ear, oh man, Amazon's the best. Oh, Tesla's the best. Your Apple, right? Like people love Apple to death or Tesla to death. But let me just say something. So there are a lot of companies these days that just are negative. They're burning cash, but their stock continues to rise because people love them for some reason. This is what I'm talking about. It's not the issue with the companies themselves, aside from they're running a really bad business. But it's just that people continue to pour money into them without understanding valuations. So some examples: Nvidia, Micron Technologies. You're taking a look at their net revenue year over year. They're bleeding cash negatives, but their stock continues to climb. My favorite example here, Tesla. Everybody loves it. Everybody knows about them, right? Blah blah blah. And if you take a look at the growth, yeah, they're okay, right? Single digits, $5 to $6 billion of quarterly revenue. Great, they're doing okay, right? But this is like the WTF moment when you're seeing the stock price quadruple, like 600, 700%. It makes absolutely no sense. And this is what I'm talking about, the biggest stock market bubble in the history of mankind. So back to this chart, the S&P 500 for the last, I think it was like 10 years, 11-year bull market, what everybody's talking about. Let me just move this off here. We've had the craziest stock market where a lot of these companies, yeah, some of them are, they're definitely worth their value, but I'm talking about there's a lot of companies in there that are just done by pure overvaluation. And what happens in every single bubble, I don't care if it's the dot-com back in 2001 or the great financial crisis in 2008, every bubble will always find a pin. I don't care. If you think about it, forget this COVID thing. What happened this year? First off, Iran fired a rocket, or sorry, no, it was the U.S. Killed one of the whatever, right? That could have been a pin. That wasn't it. And then Russia and Saudis decided that, you know what, just say goodbye to OPEC, and I'm just gonna that continue to pump more oil. That didn't break it until later. But every single bubble in the history of mankind will always burst. It just takes one pin. It's a black swan event. Nobody knows what it is, and COVID is the answer. We've had 10 years, 11 years of really good times, right? Which if you're a company, you should save some money for a rainy day, right? If you're an individual person, you should save some money on a rainy day, right? And then, of course, what happened was back in February, it just crashed like 31%. And by the way, you guys, this is not the end. You're going to see more to come. You're going to see more of it. Right now, it's like over here, it's like back to almost like 50% like retracement, but it's still overvalued. I'm talking about like, the nominal value is like back here, right? Maybe it's like a little bit above here, but it's not over here, right? These are all based on crazy stuff like stock buybacks. And I'll talk about that for 1 second. And here's my point. So typically in every single company, what do you do when there's a good times? 11 years of good times. Just like your dad and your mom taught you, you save for a rainy day, right? That's what happens, right? No, what these companies did, instead of saving a rainy day, they decided to buy back their own share. Why? Very simple. Typically, when you have loans and when you have good money, you want to do increase your productivity, right? So if you're a CEO, I'm going to be hiring more people to do more jobs. I want to buy more better machines to increase efficiency. Maybe I want to expand my production capacity, or maybe I want to, do all these stuff that are typical, like normal, like business stuff. But what's the quickest way to increase my share price and also to pay me and my shareholders? It's just for me to buy my own stock. That's really it. It's quick, but it does not do anything for my company. So here's where I get really upset. These companies are asking for a bailout when there's 11 years of good times. And you're telling me that just because 1 month of no income, they're going to go bankrupt? Crazy, right? What if you guys have no income for 1 month? You're going to be like, no, I have income. Yeah, that's because you're smart. Like, how can these corporations of billions of money have no income? Ridiculous. Now we're going to get into a little bit of the zombie companies like I was talking about. What are zombie companies? Companies that don't make money, right? So they make money or they're not making a profit. Maybe I should spell out a little bit for you. So everybody's favorite company, Uber, right? So up until like I think it was April of last year, they've made no profits. Okay. They are extremely over. I'm talking about 51 billion dollars in valuation with a negative earnings per share, and they're bleeding cash from the EBITDA, right? I'm not going to go into these technical terms, but they're not making money. That's all I got to say. But they've been around for a long time. They're not like just came up last year. They've been here for like 5, 6, 7 years, and they have made no cash. How do you think these guys survives? And like I said, back to my original point, ultra low interest rates. If I can continue to borrow and borrow and borrow and but the bank and I sell a really great story, I can continue to operate. That's really the answer for a lot of these companies. They're zombie companies. I'm not saying Uber is a forever zombie company, but I'm telling you, there's thousands of these that you don't know about that are traded publicly. My favorite one of all time, you may have heard of this, WeWork. They went from a $47 billion valuation from SoftBank um, that decided to buy them as a, as a VC fund, and then they just went back up in 6 weeks. This guy, I forgot his name, but he was so good in selling a dream and a pipe dream, and everybody loves unicorn IT companies, right? Everybody loves them. They're going to solve the world, solve all the problems, and all these people do, instead of like showing them balance sheets and fundamental how they're going to get earnings and money and like how do they increase business, they just like talk a really great story, borrow billions of dollars, and they just were burned right through it, and now they're bankrupt in a matter of 6 weeks. I'm sure you guys heard of this. This is the craziest story of like 2019, but just like elaborate what it means by zombie company. Okay, guys, about 30-minute mark. I think I'm more than halfway through. So we got, I think 1 hour is good enough. I'm gonna speed through this, and again, I have this on video. I saved it. You guys can go back if you want to talk about some details, but those are just my points. I'm gonna try to speed up as fast as I can. Okay, so I'm gonna break into the everything bubble into just news, right? Because I think now what is the problem, what is the biggest problem right now into recession and a depression. It's ultra low rates and the ability for people to borrow cash beyond their means, and they can't pay it back, and multiply that by the trillions. That's what it is. Okay, so news from last week. So I don't know if anybody saw some of this news and keep up with it, and yeah, it's really bad. Unemployment. I'm going to talk about food banks, like the basics of the basics, right? Real estate, everybody's favorite topic, and oil, historical topic, and the continued bailouts that are happening on a daily basis. So let me just let this sink in for 1 second. Unemployment in the U.S. is we're at this was I think like a week ago, but we're now at 26 million people. There's only 2 times that's been ever in history of this much unemployment: World War II and the Great Depression. So I don't understand when people tell you it's the greatest economy. How is this the greatest economy ever? And the most craziest part is, how is the stock market continue to keep going when there's 22? Like, this might not mean much, but remember, what happens in an economy when there's people that can't pay for jobs? Well, first of all, they can't pay the rent. What happens to the renters? And they can't pay like the credit cards. What happens to the banks? What happens to the supply chain when there's these people that can't pay anything? What happens, to the food that they buy, the people that they hire, and then the restaurants, right? Like, what do they do? You're gonna see this ripple effect come by. And by the way, this is only month 2, like 5 weeks into it. So that's what I'm saying. Right now, at the government, it's pumping trillions into the market to try to save it, but this will come a tsunami that's coming. So let me tell you how bad it is, right? So this is in California. This is not like a third world country. This is San Antonio. This is in, I think, San Diego, the richest country on earth. You have about, they usually feed this much, and then there's like 600. So 600,000 people went to food banks because they can't pay for food, right? Let's sink in for 1 second. I don't know how much money they've saved. Like, just because there's a couple of weeks of unemployment, they ran out of food. They have to go for food banks. Crazy. But just to put that and consolidate that note, that point, less than 50%, like you're talking about less than 25K in America, like 42%. And together combined, less like there's 70% of people have less than 50K. And how much did they save? Absolutely nothing. But this is the problem, because instead of being a saver nation like Japan, China, like these Asian nations are usually pretty good. I don't know why, but they usually save their money when they spend when they earn it, right? But Americans are 70% based on consumerism. So they consume everything. So what happens when they're out of a job? They can't consume. And when they can't consume, what happens to the people that services that sector? Consumption, right? Think of that sector. So just to illustrate how bad shape that we are in the States, Canada's no different, guys. We're about like eight. This was March. I can't wait to see. I think the end of I think this week we're going to get the numbers, but we're only about 30 million people, guys. So it wouldn't surprise me if 10%. So that's 1 out of every 10 people are going to be unemployed, right? Okay. And what do you think is going to happen when they can't pay the rent? They can't, they're unable to service their own rent, their own debt and stuff like that. And remember, like I said 10 slides ago, we're the most in-debt nation in terms of our house, right? So we're over here, Toronto. Vancouver's even worse, but think of, we can't pay our rent. What do you think it's going to be? The mortgagers that are backing us with the banks, what do you think they're going to do? What do you think the people that we rent from, what are they going to do? Right? Again, it's a supply chain. It's a ripple effect in the economy, right? Now, my favorite slide for the last week have been taking a look at the, I know I've been talking a lot about the doom and gloom stuff, but if you actually are a keen saver, this is the best time for you, right? So for those of you guys that have been listening to me since last year to save up money, buy up gold, this is a great time. Why? Because again, I'm going to take a look at the end of this week's stats. I'm going to compare, but you can tell right away that there's already an increase in active listings. This is just putting the house on the market, right? And this will correlate. Why? Because if you're unable, and by the way, let's just say this. I believe I have a pretty strong assumption that the people that are selling their places, they're leveraged to hell. These are the people that are taking one house that they can't pay and buying an extra 4, because the last 10 years is so profitable. It's easy business, right? My banks will lend me at 2%, but every year my house goes up in 10% or 12%, 20%. Like no brainer, right? I'm going to continue to keep buying it until the bank tells me no. I'm going to buy 4 of them. These are the people that are going to get hurt first. And imagine if these people are unemployed. Yeah, they're going to put it on the market right away, right? These are going to be the fire sale. And that's why you'll see the increase in sales too. Increase in sales doesn't mean it's healthy. It just means that the people are just trying to get rid of it. And you can see that for the first time for a really long time, it went down in price. So for the people that are interested in buying real estate, wait until, or just keep lowballing them into a price that they'll just submit to you. But it's going to get worse, right? When you see more inventory coming down, that's when you're going to see more problems into the housing market, and this is just all going to fall apart, right? For the people that are owning houses and they're not leveraged, yeah, just keep it. My perspective is this: if you're going to be there for the next 20 years, it doesn't affect you. Who cares, right? You're going to weather this storm. Who knows what's going to be like 20 years from now? But for the people that are saved, buy. It's great time to buy. Okay. Yes. So let's talk about oil for a little bit, because yeah, this week we've had a crazy week because for the first time in history, oil went negative. What that means is, and I'll give this analogy that I heard of on this other webcast. It's super awesome. It's kind of like you're going to sell your house and you're selling all the furniture and doing a garage sale. At about 6 p.m., your last couch, nobody wants to take it. You put out $300 for a whole day, nobody takes it. And what happens when the day's over? You pay somebody else to take it for you, like junker or where they come and take your couch. That's exactly it. Barrel oil. That is absolutely insane. You're basically saying you're paying somebody to store your oil because of the fact that nobody's been able to take it and nobody's able to consume it, right? That's the problem. We have a big demand shock. Nobody's flying. Nobody's using their transportation. Nobody's using railroads. Nobody's manufacturing, or should I say, like total reduction, right? 10%, right? So when that happens, and at the same time, the U.S. is the biggest producer of shale today. Producer, not distributor. Not the Saudis are very powerful than that, but they're the biggest producers of oil on this earth right now. But at the same time, you have Russia, you have OPEC, and you have Saudis that are continue to pump oil at an ultra low rate. And I think that you guys have heard like a couple of months ago where Russia and Saudi in an OPEC meeting, they decided to just not agree with each other and to give each other the middle finger. They just continue to pump and just to put. I think it's a tactical move to put the U.S. out of the market, which is smart. But we'll see what happens. But long story short, unless the first thing that's going to happen is it's going to stay this for a while because there's no signs of opening up. Maybe it will very slowly. And even if it opens up, guys, I'm not going to see it go back to $100. It's going to maybe 30% of that. Like, I mean, this world is going to change because you're going to have less production. You're going to have less people going back to work because of many different reasons. Because a lot of times it's not just because of demand. The business just went bankrupt. Like, and there's not going to be that many manufacturing, not many restaurants, not many, transportation companies, right? Because they ran out of business during this crisis. So who knows what's going to happen? But yeah, we might not have the same demand. And when that happens, you're gonna see it continue to like be low. If the first inkling of this is when I see demand pick up back up, as in people are starting to go back to work, or if U.S. cuts production, because right now, just with everything else in life, you can't just shut off an oil well. It takes weeks to shut it off, right? It's not easy, and I need to see like Russia and Saudi, they come to some term of agreement to cut production. When I see that, that's when the oil will come back up slowly. And of course, the U.S. government is going to bail everybody out. They don't care who it is. They're going to promise to print more money to help them out, even though they're losing money. By the way, shale companies and all the Canadian oil market is actually the worst. Oil sands is by far the most expensive way to make oil. U.S. is like $40 a barrel. In order for them to make money, the barrel will have to be $40, but it's nowhere near that. So they're going to get bailed out, which is crazy because why would you bail out an unprofitable company? It's just more like moral hazard. And I got my friend Jerome Powell here printing money in the U.S. Federal Reserve. So this is just a slide to continue to talk about all this crazy stimulus that the U.S. is printing. $3 trillion, and it's going to be like day by day or week by week. I lost count. There's just so many alphabet soups. They come up with all these abbreviation terms to print money for the economy. I think I'm going to spend more time talking about another webinar, but yeah, they're printing money like, like crazy. Bank of Canada, no different. We're doing exactly the same thing as the U.S., right? In terms of buying or issuing treasury bills. And treasury bills is just Canadian bonds or T-notes or like short-term bonds or debt to the government in terms of that. And then on the other side, they just print money out. So we're no better. And this is one of the crazier things I just wanted to point out in regards to why it's such a failure when you print money, because they don't have a way to gauge where the money should be going to. Like, for example, when you say small companies, because that's what they promise. They promise small bailout, like small company bailouts and stuff like that. Where is Joe's Pizzeria? Where is Patty O'Grady's Irish Pub? It's nowhere there. They're bailing out these crazy companies. Like, why would Harvard need a bailout? Or Lakers? Like $4.6 million in bailout Shake Shack, and then Ruth Chris gets $20 million. These people are earning millions. Why do they need a freaking bailout? It makes no sense. Sorry, guys, it's just so funny because it doesn't make sense at all. Like, if you take a look at some of the loans proposed, like these are like multi-million. M stands for million, and market capitalization. They're in the hundreds of millions. These guys don't need a bailout. They should print like a rainy day fund, right? With thousands and hundreds of employees, not the small, but small businesses to me is your local family mom and pop laundromat or something. That's a small business. This is not a small business. And like, remember I talk about zombie companies? These companies, if you take a look at, and TTM is trailing 12-month net income, these are not making profit. Like why again, zombie companies, why do they exist? Low interest rates. That's one of the many reasons why they're still around. So if you can think about it, remember, capital is finite. It should be finite, right? If it's a finite system and you allow, like, if you can imagine like Shark Tank, everybody gets a loan, everybody gets a deal, then what's the point? Everybody gets money. Just start a business, right? But 96% of the ideas suck, and that's the reason why they shouldn't have a business. But if you allow low rates and stuff like that, they're all gonna get money. They're gonna all start a business, and then that money should have been in a cancer, like to solve cancer companies. Like those ones need money, but not these guys. But yeah, I'm just gonna finish up here and just talk about the moral hazard and also in the bailouts, not just on the businesses from the employees, because you'll see here, the people that are getting the bailout, it's starting to not make sense for them neither. Because when I say that, these people are getting more money to stay at home than working. Okay, let that sink. Like Ottawa, let's just talk about Canada, right? They're getting $2,000 a month, and they're also getting EI, or they're also doing all this other stuff. So literally, why would I want to go back to my $15 an hour job when I can earn more sitting home? Makes no sense. I don't know where this comes from. I don't know how they come up with this crazy idea, but that makes no sense. Okay, I talked about a lot about like doom and gloom stuff here, but I wanted to talk about gold. I am not going to introduce gold as an introduction because gold is such a precious topic, and I think I need just some hour just to talk about it by itself. But I'm just gonna quickly talk through some of the things that you can get educated in, because I think that I'm gonna do another section just for gold and what gold is about in the next coming couple of weeks. But I want you guys to just go into and read about gold. And why is gold so important? It's because it defends, from hyperinflation and inflation. Gold has always been, in thousands of years of history, an inflation-proof tool. It helps you against inflation. It actually helps you from government spending out of control by printing more and more and more money nonstop. Insolvency, which is actually a very, very a probable thing when they can't even service their debt anymore, right? Lots of purchasing power, aka 50,000 house now, is now 300,000. It's the same house. Nothing has changed. It's the same material, same supply, same vendor, same windows, but it's basically because there's more money printed into the system, but it's only one house. It's the same house that you're losing purchasing power. That's what I mean by losing purchasing power. And this is another concept that's been talked about in the global monetary reset, which is like, this is the end game, where when they realize, the whole world realize that the US can't service its debt, they're going to have to get together in all the G20 central banks and figure out that, okay, the US dollar can't be the global reserve currency anymore. We can't trust it. Nobody trusts it anymore. What happens? You're going to get a global reset. I'll talk about that in another segment, because that's a crazy amount. Three of the people that I follow the most: Mike Maloney. He is the best, mentor for this the secrets, hidden secrets of money 8-part series to talk about gold. I highly, if there's only one video, just watch this one. This one is by far the most easy, very entertaining. It gets you to understand what gold is, what does it do, value, money versus currency, why is it still around, that stuff. And of course, Peter Schiff, also one of my favorite personalities. He has his own radio show. And Lynette Sang, I follow her as well. So I follow a lot of people, but these three people are kind of like gold experts in their own right. And they talk about macroeconomics, the basement of currency, and all that other stuff. Yeah, I'm going to quickly talk about that gold. So gold has been in existence for thousands, 3,000s of years, and it has not lost its, every single fiat system. I don't care if it's like Japanese yen or whatever. If you think about it, there's 10 versions of that before like it is today, and all of them went to zero. Every single currency always goes to zero, but gold has never lost. It's always been around. Your grandparents, their great-grandparents, they used to trade in gold. There's a reason why that's the case. You can't print gold. It's a great hedge against crazy government printing, and it's still around today. And if you've been following me for the last year, you've not lost money in gold. In fact, this is, I think, about week old. It went down for a little bit, but if you were in gold before this whole crash came in the stock market, you would have been up 13% in gold, in just the gold spot price, GLD or whatnot, different couple things. And also, if you're a little bit more aggressive and you want to do senior minus, you would have doubled your money easy, like just in the last month from now to today. It is like a month from, they went for like $26 to $70 reverse stock buyback and stuff like that. Okay, I think I want to. I'm gonna skip the technical analysis for the people that want to stick around afterwards, and yeah, I'm gonna park that aside. I'm gonna stop. Actually, I'm gonna keep recording, but I will leave that to the end for the people that want to do like technical charting and stuff like that. I'll go through a little bit of what I see and stuff like that to talk about what I see gold is going through. So more to come in a bit. But some homework. Okay, the number one thing aside from reading Mike Maloney is to understand inflation. So these two gurus are great. They're really easy at presenting a very simple concept, how that affects you, and also very easy to understand in terms of how that affects you as an inflation. And okay, all right, guys, I think that's it. I'm gonna leave the rest of the hour, and I think I'm gonna go over a little bit here. Feel free to just unmute yourselves. I'm just gonna let it open up. I'll just stop talking for a bit. I have a list of questions here, and maybe you know I'll just ask the audience first. Why don't you guys ask me some questions, and I'll go over these ones when there's more time afterwards. But let's get to your questions.
Yeah, Victor.
Hey.
Curtis here.
Hey, Curtis.
Just wondering, first of all, that was great. A great presentation, man.
Thanks.
I was wondering what your take is on oil long term. Are we going to see maybe a switch into more clean energy after this is all said and done?
Yeah. So my again, I'm not an oil expert. I'm a gold expert, but my take on it is it will go back up, but it will never go back up to its previous highs. Like remember back in the previous highs as in Fort McMurray days when everybody in Canada went to Fort Mac to get like $100 a barrel. Like we're never gonna get back there. Why? Because clean energy is just one facet of it. But the reason why oil is here to stay is because we just can't change the infrastructure. AKA, what about the railroads? Like, what about ships? Like, they're not gonna all operate in like solar power, wind power, and all that stuff. You're still gonna have a big market in that. And you're right, maybe the consumer cars and stuff like that will get into that, but that's a small market in regards to manufacturing. Like, what about the factories? How are they gonna get powered, right? So, I think what's gonna happen is that over the next long term, and when I say long term, I'm talking about more than a year. Okay, so for some people that's short term, but I think in a year you'll see at least maybe $10-15. That's just this is my opinion, right? Don't take it for at the very least to see when $10-15 has at least you see people coming back. But it really depends on why you want to play oil. Like, is it just because you want to play it so that when people come back, you get appreciation that you let go and do something else? But it really depends. But long term, I think it'll go back, but it will never go back to its previous highs. Next question.
Hey Vic, I'll ask for the group like from one of our other chats.
Yeah.
Is that just took a note? Day trader versus swing trader versus buy and hold strategy for building a plan, and some of the things to consider.
Yeah. So okay. So this is now getting more of the mechanics of of trading in general. So for those of you guys, it depends on various like what your disciplines are and what you guys do on a day-to-day level. Day trading is you're in the market and out of the market intraday, which means that you will never leave money overnight. Okay. The benefit of that is that when you don't leave money overnight, you're sheltered from the crazy overnight swings. So, AKA, give an example. Oil is example, right? So maybe overnight it just went to zero. Like you're screwed. You can't your money's locked in, right? So day trading will allow you to park that money and you basically buy and sell within the day. The good news about that is that you usually have to aim for very super volatile stocks, because if you don't get plus minus like 10% a day, you're not going to make money, right? You can do crazy options and stuff like that, but that's really day trading. Day trading is you trade, you buy and sell multiple times within the day, and you're glued to the screen, and you can't have another job. Like, it's one of those things. Swing trading is you pick peaks and lows, highs and lows at a volley, right? So, for example, I was talking about, maybe I'll talk about gold, right? So swing trading is basically, for example, I'm just going to, I'm looking at history. Can everybody see my screen? You can still see my screen, right? Right?
Yep.
Yeah. So basically, you're picking, for example, there's a triple bottom here, and you have a pretty good conviction it's going to, you take a position here, and you just go away. And then you come back maybe in a week from now or whatever. This is like a couple of days, and you realize that, oh, maybe this is it. I want to take out. But the swing trading part is you buy the lows, sell at the highs, and you look at different indicators to help you gauge when to buy, but you buy it when it's overbought. You buy it over. Sorry, you buy when it's oversold, and you sell when it's overbought. But that's more of a technical analysis, a question I'll address another time. And what was the last one? What's the other one? Fine.
No, it was just like about building the plan and things to consider, which you kind of addressed already.
Yeah, so it really depends on your time on screen, right? So if you are a day trader, you can't have a second job, right? For the people that have a 9 to 5 like me, I like swing trading, but I also leave my screen open in the event of sudden drops, right, in the market, and I have to react to that kind of thing. But typically, if all things are easy, predictable, I leave it alone, right? Unless there's a crazy opportunity where there's an intraday dip. So I'll give you an example. This is like 1 hour chart, right? So if I were to buy here, great, I'll leave it alone, blah, 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 blah. And all of a sudden, within 1 hour of this, this is like 4 a.m. I can't do anything about it, but let's pretend that's 10 a.m., right? It just dropped. I'm going to react. I'm going to do something because I'm like, okay, at this point, I'm like, did my fundamentals change? No. Then I'm going to buy the dip. So I'm just going to buy more. So those are the behaviors that are swing trading versus day trading. Day trading, you're just going to scope this out. I'm going to buy it at 9:30, and I'm going to continue to buy, sell, buy, sell. Yep, I'm going to sell here. I'm going to buy here. I'm going to sell here. I'm going to sell here. I'm going to buy here. I'm going to sell here, like that kind of thing, ideally. And then the last part of your question is the Warren Buffett's method, which really doesn't work anymore today in today's market, which is you buy and hold for multiple years, but you buy blue chips and stuff like that. So it's different strategies depending on how much time you have, and also how much technical knowledge and fundamental analysis that you want to do because if you're day trading, you'll be scanning hundreds of companies at a time, right? So to find the best trade. Day trader, I usually like to do liquid stocks because those are the ones they can buy and sell very quickly without liquidity issues. So that's why I like ETFs and stuff like that. But that's that. But again, I'll get into a little bit more detail later for that. Next question.
Hey Victor, it's Juno.
Hey.
How do you trade during off hours?
How do you trade during off hours? You can't, right? So okay. There's a couple of things you can trade like 24 hours a day, and that's currency, and there's futures. Unless you're familiar with those, don't touch it. Hey, just go take a look at that. You see that? Gold just went up a couple of spikes. That's interesting. But anyway, okay. How do you? So this I think ties into this other question that Daryl had about duration, right? There's day and then there's GTEM, right, or the good till extended market. Okay. So back to your question first, Junha. You can only buy and sell normal hours with normal stocks, so 9:30 to 4. And then there is an extended window before and after that. The before is around, I think, 7. And then after that's till 6 or something like that. And that's where you have to change your order type to GTEM, which is the good till extended market. The commissions are higher because obviously there's more work involved to do that outside. And there's not a lot of liquidity. AKA when you trade in a normal 9 to 5 market, there's a lot of trading hands, like millions, right? There's hundreds of thousands of million hands changing back and forth. But when you do this outside, you're only looking at a couple hundred. And then when you don't have a liquid market, your slippage is going to kill you. So when I say that, which means You put in an order for $25, you get executed, and you have to buy it like $26 as opposed to 25. You don't fulfill the price that you want. That's the danger of it.
Okay, so when I see on Questrade that there are, trades happening at like midnight, what is that? How's that
Those
possible?
are just charts. Those are just charting data.
Okay, so
Those
they're
are
not
futures.
actual trades.
Those are futures. Like you see gold right now, it's moving, right? Right?
Mhm.
The reason why that's moving is because the Asian markets are trading it.
Ah.
It's the Asian markets are trading it, then Japan, then Australia, then England, then it comes back to us. So commodities are always traded 24 hours, not by you, not by TSX, not by Nasdaq, not by all those other ones, but the England market, the ASX, and the Australian market, the China Hang Seng, right? I mean, they get traded. It's their turn. That's the reason.
Is that possible for company stocks as well?
Yeah. Look, one
Okay.
company can trade on multiple different exchanges, and then you rebalance every time. But if you want to trade, like you have to set up like AK. If you want to trade in Korea markets, you have to have an account in Korea. You have to fund it in a Korea denominated currency, and then you have to register an account. It's completely very complicated, but yeah, you can if you want to.
Okay. My second question is, which stocks are you constantly monitoring and why?
GLD and NUGT. I always look at gold because I mean, like gold is my baby, right? Like it's just, I mean, I hate to say like I don't trade like I don't know like Netflix or something like it. It's just there's not good value there, and the most undervalued stock right now is gold. So when I take a look at specific stocks, I look at things like GLD, NUGT, and then there's NUTT's evil brother, which is dust. So there's inverse ETFs and there's long ETFs, right? But specifically stocks, I look at GLD and NUGT. NUGT is the senior miners, which is the Barracks, the Agnico Eagles, the Kinrosses. These are the guys that are established with liquidity, big company, lots of liquidity. And then there's the junior exploring companies, right? Which are like the exploration companies. They're more like, and that's why there's JNUG, right? Things like that. I'll talk about that a little bit later, but I usually just bounce around gold with GLD and UGT, and then I do silver as well. So SLV, SIL, SLV and SIL. And then I dabble into sometimes shorting the S&P, the S&P, whatchamacallit, right? So these are SPY. Yeah, SPY. Correct.
Okay. My last question is, why do you think Warren Buffett's method doesn't work anymore?
It's not okay. So it's really with the invention of algos, right? So it used to be all humans trading this stuff, right? With human speeds and stuff like that. But a lot in the last 10 years, the technology's made it so advanced that if Twitter, if tweet, like if anything comes out, the algos, or when I say it's the algorithmic traders, which is the machines at these like Goldman Sachs, JP Morgan, they detect that, they sell like millions right away. So there's no way that it's faster it's no way that you can keep up with it, right? The buy and hold method also only happens in a normal market, but we're not in a normal market now, right? I mean, with COVID-19 and also with the recession, like his methodology only works in times that are good. So 8K, the last 11 years, it might be good, but now it doesn't work, right? Because we're in a different market environment than what's used. But a lot of these other crazy tools that they use right now swing that away from normal day-to-day operations. So that's what skews it. You can still use it, but it won't work as effectively.
Okay. I got more questions, but I'll wait for other people to ask.
Yeah.
Hey, Vic, there's a question on the chat.
Real estate, how much of a drop do I expect? That's a great question. It really depends on April's data, man. I don't know yet. I haven't seen April's data. When I see it, that's when I'll know. But what I expect, if you take a look at the garden variety recession that we had in 08, that was I think 20%. This is a lot bigger than last time. So I would expect maybe 30, 40. It really depends on what you're looking for. I mean, if you're looking at like you know, if you're looking at, like, for example, if you're looking for Saskatchewan, yeah, you're gonna buy one of like $10,000, right? And I'm just giving an analogy, but if you're looking at GTA, it'll drop. It won't drop that much. So it really depends on, because there's a lot of pent up demand too for the people that are renting for a really long time. I know at least a couple of my friends, they've been waiting for this crash to happen for like 10 years, right? Because they know they can get crazy value, and you know, the first thing people are gonna do on the silence, they're gonna buy right away. So I think they're gonna reach an equilibrium, but I would expect somewhere between 20 to 40% off discount in GTA. But who knows, right? The data will tell us based on real estate, but they get published like every month, so you'll know for sure. Okay, I'm gonna just step in here for 1 second, and maybe I'll throw in a question from my list here. Somebody asked, how do you read the state of the economy very, very quickly? I have a great answer for that, and there's only one website that I really take a look at for that. Message me after, I'll send it to you. But it's the Forex one, guys. I think I sent that to you. But at any given time, I look at. I'll show you last week's. These will tell me what all countries and all the data that's happening in real time, right? So at any given time, I wake up, I just take a look at these numbers, right? And I look at very specific ones. I look at the red ones. So things like, you know, I'm going to focus on the US, right? So these are all GBP or you know, the Britain, Canadian. I look at CPI because that's inflation, right? So red means no good. And then you can take a look at what these ones are. It tells you like inflation, right? So that's when it tells you that, yeah, you're starting to trend this way, you're trending that way. I think Thursday was a really bad day when you saw like all the red across the board. So that's like the European, the biggest ones are like in Germany and France. And then I look at the US, so unemployment. So that's like 4.4 million, right? Manufacturing, you can tell a little bit. And by the way, just because it's green, it doesn't mean it's good. A number under 50 is contraction. So some of these ones you have to read up on it to know what it is about. So above 50, expansion, below, contraction. So contraction means recession. Manufacturing is, you know, one of the most important things I like to look at because it tells on your production output for any given country. New home sales, yeah, how many people are buying, right? Or how many people can afford it, right? So, you know, there's going to be more inventory coming up or not, really depends. So take a look at this. Take a look at the description if you don't know what it is, and it really tells you at a quick glance how the economy is doing in relatively big economies in a G7, G20, whatever you want to call it. Okay. Second question. I'm going to see if I can do a NUGT reverse split. Okay, so so in the stock market, you'll have times where there's a stock split, a regular stock split, and then there's a reverse split. Here's how that happens. So remember Apple back in the day, it was like $1,000, something crazy like that. So what they do is they basically printed more shares. Hey, again, right, going back to printing. They issue more shares. That's exactly what they increase the float, right? Why is that important? Is because nobody's going to pay $900 a stock. So because I want more average Joes to buy my stock, I'm just going to dilute my stocks 1 to 5. So for the people that hold it, it sucks for them because there's more people that can own the same amount of stocks with a lesser price. Even though it's the same equivalent, it just means that if there's more float, again, inflation, deflation, right? If there's more flow, aka more shares out there outstanding, it means that people can buy it, but more people have to buy in order to drive the stock price up to be an eventful event. However, if it's a reverse, it's the exact reverse. And a reverse split, like in NUGT, the people that own it, like me, like Daryl, I think there's a couple of you that got it. It's great for you because your share cost went up, which means that it again, you're not diluting, you're doing the reverse, which is the people that don't own it will have to pay more. So it's deflation for you, which means that in order for the price to drive up, it's a lot less now. It's very easy to drive the price up because there's less float or less outstanding shares. That's what it means for reverse and no, whatever. My next question also, I think Raymond asked this, reporting to government for gold purchases. No. When you buy physical gold, okay, I don't think I have it in front of me, but the ones that are like, you know, I'm sure you guys have seen physical. It's just a bar, right, or a coin, right? Okay. Per transaction, the government of Canada requires the dealers to report to them if a transaction is worth 10,000 or more. So if you do not go through this amount per day, you don't have to report it, and vice versa. If you sell it, it's the same thing. Okay, so you do not like. I mean, why would you want to report to the government? It's stupid, right? Like they're gonna tax you. Why would you want to be taxed? Nobody wants to be taxed. So when you buy gold, it's all cash. And you know, as long as you spend less than $10,000 per transaction, they're gonna give you cash, and you're gonna get it, and then when you sell it, blah blah blah, and you don't have to report anything. That's it.
Another question is, how about transport between countries? Does that $10,000 number also apply?
Well, so first of all, they have the metal detectors can detect it, so you have to think about that. I think in small denominations you'll be fine. So you know, if you go to the States, like one of the things to your slip is, are you transporting more than $10,000? And by the way, why $10,000 is because it's the Canadian anti-money laundering laws in Canada or whatever for terrorism organizations. That's the reason why. So when you go to the States, they'll ask you to declare it if you do. And of course, you don't have to declare if you don't want to, but you run a risk, right? So if you do do it and whatnot, just bring smaller denominations and go a couple of times. That's my recommendation. Or I got a better idea for you, and that's goldmoney.com. I'll talk about that after for people that are interested. And it gets really technical, but not really technical, but there are companies like that allocate gold in your name in other countries, and then you can just fly over there and get it. But I'll talk about that in a sec. Any other next question? If not, I'll just fill it up with questions.
Victor, so when you say you try to avoid non-liquid stocks, are you just talking about stocks where there's not a lot of people trading?
Yeah, so I'll give you an illiquid stock is like penny stocks. Nobody buys them. Like in terms of, if you take a look at the amount of purchases a day, you're looking at like maybe 1,000 or 100, and that's it, right? But if you take a look at the ETF, I'll show you what I'm talking about here, right? So I'm hoping to see, I don't know, Google Finance or something, right? In a typical stock, let's just say Google. I don't even know what this. No, this is an index. You can't really trade that. Netflix or something like that, right? The metric that you want to look at for liquidity is volume. Where the hell is volume? There's a one called average volume.
Yeah, I think it shows up on Quest Trade Edge.
Correct. That's
Pretty
what you look
easy to
at.
find. Okay.
If you see that number below 1 million, it means that it's not really that liquid. Okay. I like anything above like 700K, 1 million, because there's a lot of traders in there. And one of the key concepts that I want to tell you guys is slippage. Now, when you guys are trading, when you buy something, there's an ask and bid price, right? Right?
Yep.
Usually they're very close to each other, right? That's because it's a liquid stock, AKA the price that somebody's like, okay, so a little bit of basics for everybody here. The ask price is the price that somebody's going to sell it to you if you were to buy it. And the bid price is the minimum price that someone's willing to sell it and somebody's going to buy it. So depending on where you are. So if you're a buyer wanting to buy a stock, right? The price that's on screen, that's not the price that you're buying. You're buying the ask price, right? So that's the minimum price that someone's willing to give you that stock for that price, okay? And vice versa. If you're selling a stock, you're looking for some guy to wait to buy your stock, but your bid price is what they're gonna be. The price that you're willing to sell it to somebody to bid for that for your shares. So typically, the ask and the bid price. You know what? I got a great example for you because I was looking at this earlier. Now, thanks for reminding me. Okay. Even though this is precious metals, it doesn't matter. Stocks are exactly the same thing. I'll show you what's illiquid. So when you have a healthy, a healthy liquid, you see this? They're very close, right? Even though like it's in thousands of dollars, maybe it's like $10, right? maybe this one. Yeah, that's pretty liquid, right? If you want to buy an ounce of so it's a spot price. If you want to buy an silver ounce or whatever, right? You have to pay this price, and then this sorry, you have to buy the ask, and then you have to sell the spit. That they make the spread. Long story short is when you see stocks and these two numbers, they're very apart from each other. It means that the price that you see on the screen, it doesn't matter what it is. You're gonna get the ask price, and when you do that, it means the liquidity in the stock, and the how much are people willing to buy and sell at. Usually you want it close, so that's why there's liquidity. That's it depends on the float and all these other factors, but that's what it's for. It's liquidity in the volume that's being sold in the stock.
Gotcha.
Next question. If not,
A question about ADX, average directional index.
Yes. So I usually use ADX. Now this is a very technical question. So ADX is basically it's a momentum indicator. So I think technical analysis needs its own separate whatever. But there's momentum indicators. There is what's the other one? Volume indicators. I think yeah, momentum indicators. Anyway. ADX will track how many people are, the strength of the volume. So usually when it's above 40, it means that it's going to continue going that way. So for example, when it crosses 40, like right here, and it continues all the way here, it means that you have some confidence to know that the stock will continue to trend the way that it's trending right now. And when it's losing momentum, it just means that it's losing the momentum that it's gaining, and it's going to trend some other way, because you have stocks that just flip flop all over the place and they won't trend at all. I don't know if I can find something else here, but let's just say I don't know, Canopy Growth. Maybe you guys can like give me a stock or whatever. I'll take a look at it quickly and I'll show you maybe some examples, right? So like look at this, right? When it's not like smooth and you have little gaps, that's when liquidity is an issue. Like you can tell these little bars are short. They're not really liquid. And ADX, like if you see that it doesn't go above 40, right? It just means that it's bouncing back and forth between this and this. That means it's not going anywhere. It's just like trending. No, sorry, not trending. It's what's that word? It's an equilibrium. That's why the ADX would be below 40. And it just means that that the market has moved, hasn't made its mind about which direction it's going. And of course, I wouldn't buy. Let's wait to see what happens. That's what it's telling you. Next question.
Like kind of how the junior miners have been the last like 2-3 days.
Junior miners probably won't have a lot, like depending on you're doing the ETF or individual stocks. If you're doing individual stocks, there's like barely. You know what? Junha asked that. I'll show you the company that I was talking about the other day, Silver Mining or whatever. I bet you there's like, let me see if I can find this. Silver Mountain. What the hell is it called? It's a Toronto stock. I don't know. I'll pick some other. You see this? It's like little gaps all over the place. There's no liquidity here at all. So when somebody buys like $2, it just goes up very high, right? So these are the penny stocks where there's not a lot of liquid. But when somebody comes in with like $10,000, it's gonna raise it up by like 50% or something. So that's the penny stock world. But that's another topic for another day. Okay, I'm gonna keep going. I wanted to talk a little bit about seniors, juniors, gold trusts, because they're different things. So gold, you can play a lot of different things here with different companies. Okay, so when I talk about the gold producers and the seniors, you're talking about I think I talked about the big guys, Kinross, Agnico Eagle, Yamana Gold. What's the other couple? I don't know. There's like a bunch of them, right? They're at least $1 billion in the pocketbooks and the balance sheets. They have good cash on hand. They're established liquid companies that you can readily buy and sell easily, right? Then the juniors, these are the penny stocks. These are the guys that are Okay, so seniors, what they do, they process, they refine, they distribute. They're the companies that get like, they usually are the ones that process the things that, like, juniors will give them the rocks for, right? And they would refine it into that nice yellow metal that people like and hold, and and stuff like that, and then they give it to the mints and stuff like that. So they refine it and whatever. Juniors are the people that explore rocks and find them. That's what juniors do. They're exploration companies. They go to a random mountaintop. They do geological surveys. They make sure there's roads, water, electricity. They make sure it's a good site. They dig a hole. They examine the hole. They look at geological engineers, and they figure out how much gold or how much silver, how much copper, how much cobalt, platinum, whatever, palladium, all the great metals on Earth are dug, and how much of a percentage in like in a certain tonnage. And from that, they own that property, or they have the rights to. And usually the goal of the juniors is to strike it rich and sell it to the seniors. That's their whole job in life. That's the juniors. Gold trusts. Gold trusts are like GLD. Very important to understand. What do? They actually hold physical gold, and their only existence in life is to buy and trade gold that's in their vaults. Okay. Now, you might have seen like the GLD. I think I told you this report about unallocated gold and all this other stuff. Let me talk about gold trusts a little bit. Gold trusts, or GLD, like I said, they basically have, let's just say they have 2 metric tons in their vaults, and when you buy their stock, they basically say that, yep, you own this much, okay, you're allocated like 2 grams of this entire vault is allocated in your name. However, a lot of these companies, you have to read the prospectus or read these gold stocks or what these gold companies. A lot of times, they don't have a lot of transparency, aka you don't know how much gold they own, and a lot of times they double book. And I'll give you an example. One of my favorite examples of gold trusts and they double book and stuff like that is this. You guys fly on airlines all the time, okay? Air Canada, don't care. Delta, American, they overbook flights all the time. Why do they do that? Because they know every single flight in the world is about 85% occupancy. 15 people won't show up because of many different reasons. They don't care. What they do is, I don't care. I'm just gonna sell the extra 15 people, flights, anyways, and charge them $1,000. Let's just say the flight is a very long flight, it's $1,000. Now, sometimes they luck out, and 15 people don't show up, and everybody's allocated. Great, right? They have the same amount of seats. They get on a flight, everybody happy. Now, what they do is, if they find an overbooked flight, they're going to do those games, right? They're going to say, okay, guys, I got a free hotel stay here. I got $100 off. And they basically play the game of, there's 15 people that sold extra seats to $1,000. So that's $15,000. And I don't have to pay like maybe 15 people $100 each. They play this game because they want 100% occupancy. That's it. Gold Trust, exactly the same. You don't know how much gold they have, and what they do is they allow you to they book your name against that gold, because they're hoping that you do not claim physical. When I say claim physical, as in you actually want it in a physical format as opposed to paper gold. When you do that, they're forced to actually grab their gold and send it over to you, and then they basically write off that portion out of their vault, right? What a lot of people do in GLD is they buy and sell, buy and sell, buy and sell all the time. So they're hoping that people don't take delivery on the same allocation of gold that you're claiming. Do you understand what I'm saying? It's like this musical chair, just like airlines. Just think about it that way. They're hoping that people will buy and sell and not having to deliver it, versus the people that asked to be delivered, and then people bought it off already, right? So that's the game that they play. So that's gold trust. Some of them are unallocated, okay? Some of them are allocated. Now, the company that you talked to me about, Raymond, earlier, I looked at the perspective. I think on a high level, they're allocated. There's a couple of other ones. One is called phy.to. It's the Sprott Gold Trust that I gave my dad. And then there's also goldmoney.com. Goldmoney.com is actually one of my favorite, what they do. And this is actually, it's a Canadian company. And what they do, it's actually pretty easy to understand. They hold gold in 15 different vaults around the world. And what they do is you have to read a little bit about it, but basically, let me see if I can find like I don't know. You have to read it, but basically they have about 10 different vaults around the world: Saudi, Canada, U.S., Swiss, Japan, whatever, Singapore, right? And depending on what you can designate, you can give them Canadian dollars, and you tell them, I want like Canada transfer to whatever currency based on the vault that you want to hold gold in. So for example, if you want to go to Japan or whatever, if you like Singapore, I want to allocate my name under the Singapore vault, and that grammage or whatever you want to call it. And when you do that, they hold it in your name and it's insured. So it's a little bit safer, more safer than GLD. But again, the safest way, hold physical. I have physical like all the time. That's like if you can't touch it, it's not yours. I always believe in that rule. So that's why I usually have a different allocation to physical versus like paper, stuff that you can't see. Okay.
For
Next
these
question.
gold trusts, what's stopping people from buying into it and just like, all right, I want to pull it right away?
You have to
Is it
settle.
like a?
It's a lengthy process. Yeah.
Okay, so there's just some type of measure to deter people from doing it. Like
No,
actually just like pulling right away.
No, so basically they don't, because it's kind of like how does Air Canada know that everybody's going to show up? It's just by statistics that 85% of the time not everybody shows up, right? Or 100% of the time only 85% people show up. They play that game because but in the gold trust world, people buy and trade all the time, because when people buy and trade all the time, they're buying and selling contracts of it. So they don't expect them to take delivery. But what you're noticing in terms of the last couple of months is that market is slowly draining of physical, because everybody's taking it out. So that's why right now, even though that spot price is like at 17 whatever right now, and it's not that high, there's going to be a day when this game just runs out and everybody wants physical. But who knows? Like it's controlled by two major bodies of regulation or whatever. One's called the COMEX and one's called LBNA. You have to read up on a little bit of that, but it's all, a lot of times it's smoke and mirrors for those guys. So it's really hard to do it. But the beauty about GLD and stuff like that is that it's highly speculative. That's why people love them. It's very easy to buy and sell all the time, constantly. That's why people love GLD. They trade as if it's speculation, rather than a futures contract. Because if they want physical, they just go to their local store. Why would they do it here? Because in order for them to take the possession, they have to take it from the London vault. They have to ship it, and there's all these like costs involved in it. So they rather just go to the local store. That's why.
Got it.
Yep. Next question. I'm gonna keep going, and okay. This one's important for all you traders. Gold versus miner. I already talked about that. Versus SPY versus DXY. I think this is the last question that I have on my list. But very importantly, I want you guys to understand the relationship between. Give me 1 second here. Okay, gold. You already know what it is. It's the spot price. Okay. Oh, this is great. You see that? So one of the things I like to do, Daryl and Ray, for you guys to look at technical analysis, I draw trend lines, right? So trend lines is, for example, there's one touch point, 2 touch point, 3, 4. So that's a pretty good one. And I draw a touch point here. But when it breaks out of one, it's usually pretty good. And also you can see it's a lower high, higher low. Sorry. Yeah. So it starts off here, higher high as in high of, like it didn't go before, higher low, which is compared to this, right? Actually, this is not higher high, but anyway, this is kind of like a lower, but then it broke through this this little, whatever called wedge or triangle. And when you do that, that's significant. However, there's no volume. So it might just go like break back into trend, or if there's more volume to follow after these calls, what's going to happen is that it's going to bounce off of this. Let's go higher. So that's a little bit of technical analysis, triangle pattern for you guys. But these signals tell me some stuff. But again, tomorrow when I wake up, it may be a completely different story. But my point is, you know what gold is, and you know what gold miners is. They're two different things. One produces it, one just the spot price. Now, why is this important? I also want to introduce you to the two other things that are correlated. One is SPY. Somebody said that already, right? I think it's Juna. Why is this important? And why is the US dollar important? So DXY is the US currency. The SPX 500 is the 500 different companies. Why is it important? Because when SPY goes up, usually the miners go up. Why? Because SPY is just a basket of companies. But so are miners. Miners are companies that are if a basket of companies go up, then you're going to see the miners go up. Okay. Gold versus this, it can be related because they're considered as risk on or risk off trades. Risk on is when you rather take risk, so that's why you buy companies like equities and stocks. Risk off means safe havens, so gold. So sometimes they're correlated, sometimes not. And then inversely, usually usually suspects is that gold is inversely correlated with US dollar. So when US dollar goes up, gold tanks, and vice versa. So when you see a downward trend for a really long time in US dollar, it means that other people are looking at other currencies to go to safe havens for. So they can do Swiss franc, Japanese yen, British pounds, and a lot of people are now moving in gold because paper currency is worthless now. So that's the difference between gold miners, SPY, and US currency. Any questions? That's all I got for today anyways. I'm tired of talking.
You never get tired of talking.
No, you don't.
You guys got any
this is
questions?
really good. I think it's very
Good.
helpful. Good explanations. I'd love to see kind of how you work. Like it would be a different day, obviously.
Yeah.
But how you work in terms of like in a normal economy, what would you evaluate things on for something you're looking into, those signals you're referring to?
Yeah. So you know what? I'll just stop recording because I think.
Yeah.
Is there any more questions that you think your general audience would like to hear?
Well, there's 3 of us only.
No, I'm talking about the people that are gonna look at this recording.
Okay,
that's okay. I'll stop it now.
I don't think so.